Hi, everyone. Welcome to Friday's webinar. Today, we're here with Carly DaCosta. She's going to talk to us about a lot of different things that she's working on in real estate. I'm Erin, and hopefully you guys have seen that we're doing this weekly right now, and we're focusing on today on syndications. Carly does Airbnbs. She actually is like kind of a jack of all trades. So I'm going to hand it off to her and let her tell us a little bit about herself and how she got into this and what she's currently working on.
Thanks for bringing me on to one of your webinars, Erin. I
You are
respect
welcome.
greatly what you are doing, and so I love being able to share a little bit about what we've got going on.
Yeah,
So,
ditto. So excited to have you.
I don't do this all alone. My partner in crime is my spouse, Jered, and he is a little bit camera shy, so he always likes for me to do these things anyway. Um, we we've been business partners now officially for just over a year, and we are still married. So that is a great sign. We got into real estate really back in 2009 when he was an ROTC instructor in Scranton, Pennsylvania, after just really filling time for his last year in the military. And we're West Point 04. So he found a property that was from a wholesaler and it needed some renovation. And that was our first duplex purchase. We still own it today. And turns out that it's been pretty good because when both sides are rented, it covers our mortgage by, at least 1.5 times. So that's great. We have always, since we got out of the military, even though we've been in finance and operations, we went to business school to transition to the civilian world, went into finance. He did investment banking. I did wealth management. He did a stint in venture capital, then to Amazon. I went into the startup world in San Francisco. And really, every time we would move, we would look at our primary residence that we would buy as an investment and try to early on do our own analysis, what we know now is our own macro and micro analysis of a real estate market, and ultimately try to look at a property in two ways. One, how can we add value? Can we add value through renovation or whatever? Even if it was just a little bit of value, didn't matter. Can we add value? And the location, we would always look for places that were in the path of progress before we even knew what path of progress was, and just served us really well. And so we moved to San Francisco. That our primary residence there was basically a flip. It worked out very well for us. And when I got done with the startup world, was looking for something else to do, what was going to be next. And at the same time, we were looking for a multifamily for us to move in, do some kind of house hacking. That was the goal. But we stumbled upon a 6-unit apartment building that was essentially more of a flip project. And there was a lot of hair on it in terms of tenants, and California, specifically San Francisco, really tenant friendly, not totally opposite of Florida where we are now, which is very landlord friendly. So we're like, well, even if the worst case scenario happens and just crap hits the fan, it still is worth the risk because the returns were so high. So I ended up deciding to just manage that whole project for the year that we thought that it was going to take in order to figure it out. And we have sold 2 of the 6 units. 1 is on the market now. 3 are still tenant occupied. And thank you, COVID, because as a result of COVID, we now cannot evict those tenants until the state of emergency for California is lifted. And then we have to wait 90 days in order to even do anything. So that kind of project is on a hold. But that brings me to why we don't really love flips. It really showed us the value of the buy and hold strategy. which, you know, we learned from that project. We really love, still continue to love real estate. We're like, how can we do this full time? And so we really just dove into educating ourselves and trying to understand the different walks of real estate investment and how to build a business around real estate. So that brought us to looking at how much cash we had on hand, which, I mean, honestly was about 200,000 that we had available to us. And we're like, that's not going anywhere in San Francisco. So which markets, based on, you know, what we, you know, taking a step back, what do we value right now in our lives? We had 2 young kids, 3 and 6. You know, we were interested in getting back to the Southeast so we could be next to family. And so we started to evaluate Southeastern markets, and we landed in Jacksonville because Jacksonville has a lot of opportunity. It's not a Tampa or Orlando that is under a microscope now from a larger investor standpoint. There's a lot of room to grow. It's a melting pot for the Southeast. A tremendous amount of business and employment growth in the city. And it's near the beach. It is so close to the beach. And there are just so many benefits to being near water and lots of sunshine and no state income tax.
Yeah,
So
seriously.
So that really, you know, is we decided that we were going to invest that cash in value add real estate within Jacksonville. And the more that we looked at short-term rentals and had practiced or tried our hand at short-term rentals on Airbnb with our San Francisco apartment that we still had a lease on, we realized that the returns are incredible for, you know, compared to just a long-term rental, you know, buy and hold, hope you can get $300 a month extra, you know, cash flow. But of course, there's a lot of operational components to running a short-term rental. So, but we realized, you know, the short story is we realized we're really good at it, and we could purchase properties that we could also add the value to and turn into short-term rentals. And then we would still underwrite the deals that, so that they would work as a long-term rental if need be. But, you know, the intention all the time has been short-term rentals. And as we have built things out here in San Francisco or in Jacksonville, we also took a page out of our playbook in San Francisco dealing with syndication, which is the whole point of this call. And the syndication piece has really helped us take our business to the next level in terms of, you know, you've only got so much cash, right? And you can only deploy so much even on your own using private money and any kind of conventional loan. So the syndication piece really helps to de-risk for everyone, and take advantage of more properties and just spread things out a lot more. But there are other benefits, you know, from a passive investor too. So that's where we're at. Short-term rentals really is our bread and butter. And we realize that syndication is super powerful for us, but also the passive investor who is investing alongside of us with these properties.
Yeah, absolutely. We're going to talk a lot more about syndications here shortly, but I want to kind of unpack a couple of the things that you talked about. So you said at one point that you had 200,000 to invest, and that is, most people don't have 10% of that, right? Like most people don't even have a $20,000 down payment. And so that's where I think syndications can be really powerful. And then those people that do have that kind of money, that they find a property that they can get into for 20% down, they have a really hard time wrapping their head around spending all that money, putting all that money into this investment, and then getting a return of $250 a month or $300 a month. They're like, man, it would take me years to
To pay
get
that
enough
off.
money to pay, or even just to save up enough for the next down payment.
Yes, exactly.
And
Exactly.
I love how you're doing. And then on the flip side of that, we have people who are like, I'm in here, my goals are short term. I want to make quick money, and they just want to do these flips. And so I like your strategy is sort of like a combination of the two. And that's awesome. So what are your goals look like when you, do you have like short-term goals, long-term goals?
Yeah, let's see. So really for the next 6 months, we are laser focused on trying to close on 2 properties that one you are involved in. And it is a turnkey short-term rental. It's on the beach. It's a super investment. If we can get through this COVID stuff, and from a financing standpoint, lenders can get back to being comfortable with lending on a short-term rental, then that will be a really great property. And then there is we are wanting to kind of move up, which I think is typical in terms of the number of units that we focus on. So this beach property that I was just talking about, it's syndicated, 4-unit, turnkey, has the ability to add value in terms of a 5th unit. So that kind of ticks our boxes there. So the other goal that we had was to purchase a medium-sized apartment building, which we found one that's 12 units. It is in the path of progress in a already pretty developed neighborhood in Jacksonville, downtown Jacksonville. And we are going through the financing process now. Now, this would be our first type of these. So the financing process is a little bit new, but that is, just going back to the goals, has been a goal of ours for the last probably 6 months. And so we hope to achieve that one. We want to, we're really focused right now on getting the properties we have to a steady state and be able to really dig into the data and compare it to what our expectations were before the investment to how our thesis is played out and what the returns, are looking like, so that we can then use that information and data to build our syndication business more. We really feel passionate about the passive investor who, we're really good at real estate, but the passive investor generally is really good at something else. And they want to keep focusing on that something else and earn income from that something else, but they just want to diversify and gain exposure to real estate. And, there's a ton of people, especially in the non-accredited investor world, that, we just saw, we're like, maybe now we're accredited, but, there's many people who are not accredited. And we're like, why do they not get access to this kind of thing? Why are there so many really great syndicated deals that, and I know why. It's because of legal issues, etc. I get it, but we want to give those people access. And there are plenty of people in our network that are non-accredited, and still some that are accredited, but who would really benefit from gaining exposure and learning about real estate through being a passive investor. So from a goals perspective, it's like getting our current properties in steady state, close on these other 2 through the rest of the year, and focus on building our network and education to bring in more people into syndications.
Yeah, that's cool. So I asked the question about goals because I think there's so many different things you can pursue in real estate, and it's really easy to get derailed. And I am like a great example of that. My goals have always been to build a portfolio, right? I just want to build this legacy. I want to have a lucrative portfolio. I want financial freedom. I want to be able to like relax, enjoy my life, hang out with my kids. And when I moved to California, I felt like I needed to replace the income I was earning using my real estate license in Tennessee. We were only going to be here for like 18 months. So I didn't want to get my license out here. I didn't want to pursue clients out here. So I said, I'm going to just pursue flips a little bit more heavily. I was kind of doing like one a quarter before. And I was like, all right, I'm going to take it up a notch, do a couple a month. And it was like, it sucked the life out of me, right? It crushed
Mhm.
me. And I like made some decent money. And then the recent one, I just lost a bunch of money. So I'm like, I feel like I just stressed out for the last year and I'm at a net zero. And also it hasn't contributed to my goals at all because I didn't add any properties to my portfolio. So I think it's really, really important that you put your goals down on paper, and you can like see all mine behind me. You like put them on paper, post them everywhere, and just keep reminding yourself of that, and like don't get derailed. The other thing
If I can just add to that, I really, the most important thing is something that you said. It's like the intent, the why, behind what you're doing, and the why behind what we're doing really is the financial freedom to have control over our own time, which step one was deciding to work for ourselves. And that has been huge, huge. I would love to talk to anyone who is interested in stepping out and deciding to take control of their own time. But really it's just like the flexibility and freedom to spend more time with our family, take more trips to Myrtle Beach to go see my dad and go to Sebring to see the other grandparents. And so that's the why. That is really the driver. And luckily our kids are still young, both of us. And so we see that reminder every day for the why, which is helpful.
Yeah, for sure. And I think that like once you really define that, and once you realize what it is that you're working for, because nobody's why is money, right? I mean, maybe I shouldn't say nobody, but very rarely is like the money the thing. Money is just the tool. Money is the vehicle. So if you can
Yeah.
figure out what your why is and what it's all for, it makes everything so much easier. Like it makes being disciplined and like sacrificing things so much easier, because you're like, I don't need this Coach bag. I don't need to spend $350 on a stupid
Yeah.
little wallet when I could go buy some real estate that will make me enough money to buy that every single month, So I think that that's like, it's a really small example, but even just like eating out or
Yeah.
things like that. So
Yeah.
the other thing I wanted to hit on that you talked about, you talk a lot about like educating yourself and pulling these metrics and things like that. For the people that don't know you, did you feel like you needed to know it all before you dove in?
Oh, jeepers. Don't we all feel like we need to know it all before we dive
Yeah.
in? Yeah. So here is, for those of you like me and possibly Erin, it's really helpful to have a support network that is around you that can tell you to just pull the trigger, and to be there to tell you, you have done plenty of analysis and you have done plenty of education. Now is the time to just do your first whatever it is. Just try it. Just do it. And that person in my life, thankfully, is somebody that I spend all day with now. So my husband is definitely somebody who's just like, let's just do it. And I feel like I've always been a great like VP. I don't really love the vision and thinking about the future. I'm just like, there's so much to do right now. Like we need to do everything today. And so it's good to have somebody like him, or even just a friend who is in the real estate world, like a you, or like a buddy rushing going through. That's why it's also helpful to just spend, if you're a veteran, checking out the White Feather real estate course, or if you're not a veteran, any other real estate course that is not asking you to pay $10,000 to take it. Just taking the course, investing in yourself, and shortening your learning curve. That's really what it's all about. Shortening your learning curve and building a network of other people who are going down the same path as you, that you can just call and say, I'm looking at this deal. I would really like a second set of eyes on it because I feel a little crazy right now because it looks pretty good. And it would just be really nice to have somebody say, yes, do it.
Yeah. Oh my gosh, I couldn't agree more. And that person for me, at least in the beginning, was Buddy. Buddy Rushing does in the accelerator, and I had been like kind of dabbling in real estate before that, and it probably took me almost 2 years of like just analyzing before I bought my first rental. And then I got like a duplex and did a flip. And then when I was taking that course with Buddy, I found a 10-unit apartment complex. I was like, this looks really intriguing, but I was like, I'm not ready for this. We'll look at 10 units in 10 years. And Buddy was like, no way, put in an offer. And I was like, you're crazy, but do it, put in an offer. I was like, all right, I'll throw in an offer, but it's not going to go anywhere. 6 months later, we closed on this property, and we've probably put 100,000 into it. It's easily increased in value by 300K, and it's just getting better every day. And I'm partnered with people that I met in that course, and being able to just reach out to them first is super helpful, to not feel like I'm completely in this by myself. Like we just put like 10,000 into one unit's roof, and then yesterday got a notice that another unit's HVAC went out, and there's another 2K. And so the good thing is, like, everything we do truly is adding value, because when we bought it, it was a disaster. It almost was like demolished a couple of years prior when the owner died. And then someone else bought it, and she just basically maintained it. But so like tons of room for value. We got it at a great price. We're going to refinance in the fourth quarter, or restructure really, with our current bank. It's been an awesome experience. So anyway, I totally agree with everything you're saying about kind of having that mentor or somebody that can guide you in the right direction, second set of eyes, and then surrounding yourself with other like-minded people. And that's not real estate specific. That is life, right? Like, you're just hanging out with, like, when I first became a stay-at-home mom, I started hanging out with all these other stay-at-home moms that like lived on my street by proximity. And there was a lot of negativity and a lot of like gossiping and things like that. And I felt like I got sucked into it. And it took me a while to realize, like, this is a product of my environment, and I needed to actively change that. And it took a lot of effort for me to like pursue other people, but it was completely worth it. So
that's a good point. That's a really good point. And I also just to make a point, I said something, said the big word syndication, whatever, you just talked about just having partners, that is it's really similar, right? Like, don't let this word syndication scare anybody. It's literally just, it's getting a group of people together to invest money together alongside each other. I would say the major difference is just like partners, you're probably all making decisions together. And in a syndication, there's generally somebody who is appointed to be in charge and like legally responsible for the performance of, the property. So yeah, there are many ways to do it, I guess. Like you don't just have to use your own money to buy a property.
Yeah. So that's a really good segue. And before we talk more about syndication specifically, I just want you to share about that San Francisco deal just briefly. So when I first met you, you were like just getting started on that project. And I remember you telling me about the cash outlay and the capital needed. And that was your first project. And you told me how much money you needed to raise. And I was like dumbfounded, because at that point I hadn't asked anybody to invest with me. I like didn't have the guts to do it. And I had been investing for, probably a year and a half. And I still was like, why would anyone invest with me? Like, who am I to ask somebody to invest? And then I met you, and it totally changed my perspective. So I want you to kind of just tell us a little bit about the money that you raised. And you don't have to go too into the details, but I think that it's encouraging for people to see, like, you just went out and asked, and you were able to do this. So tell us about it.
Okay. It went something like this. We walked over to see the property. My husband's eyes lit up. I was like, you're crazy, because there's no way that we can do this. He was like, what do you mean? You could totally do this. I was like, me? I could totally do this? Are you kidding me? Like, do it without you? Like, what? No, I can't do it. He said, are you kidding me? Do you know how you have the perfect experience for this? Which is so common, right? For women. It's something that we battle all the time, which is just really frustrating and annoying. But that's another subject. Also a good reason to have the right people in your life. So anyway, you know, we then went home and we ran the numbers, and really we went, this is another good example of just like researching and finding tools. We stumbled upon Michael Blanc. He is an apartment syndicator, and went to his website. Jered found it, and he was like, let's just download his Excel analyzer. So we downloaded his little analyzer, and it was crazy analyzer, but it was still worth it, great. And it was super cheap for, the benefits that we were getting or the value. But we were like, man, okay, these numbers like look really nuts if we could do it. But there was, like I said, a lot of hair on it. So I was like, well, we definitely wouldn't be able to do it on our own. It was $2 million purchase. And we had enough for, to like front the EMD, basically the earnest money deposit. But beyond that, we were just like, the only way we would be able to do this is if we raised money, like this Michael Blanc guy does for his apartments and syndications. And I had the exact same thought as you. I was just like, who in the hell is going to give us any of their money? And then I was like, you know what? I was transitioning from my job. I knew that I wanted out of my current job. And so I was like, what the hell? I'm just gonna, the worst that anyone can say is no thanks, not interested. But at least they would know that like we're into this real estate stuff. So we just combed our list of family and friends. We put together an email that was like, we're thinking about putting an offer on this thing. We really just wanted to throw this out there, and the email was like caveated with all kinds of like, you don't need to do this if you don't want to. And we have this kind of experience. This would be our first type deal like this. But we really, for the down payment and expected renovations, we needed to raise just under $1 million. And I was like, if this happens, it would be a miracle. So we sent out an email to just friends and family. And I was astonished at how many people, just because they knew us, and this is where it's just like trust comes in, and why, the work and experience that you have historically matters, and like the relationships that you build with people matters, is because they see how hard you work, or how you tackle a problem, or how you react in stressful situations. I mean, your honesty, how you treat other people, all of that really played in to just people feeling like, well, Carly and Jered are smart people. They've done their research. If this deal works out the way that they say, then we could double our money. So, and it would probably, well, at the time, it was like supposed to be a 1-year project, no more than 2. We just passed our 2-year. Thank you, COVID. And so unfortunately, the returns are still super relative to where else you could be invested. But my point is, it was like, that's why people invested with us. And I had 2 people from the place that I was leaving, like the workplace that I was leaving, 2 of my largest investors who are also investing with us in other projects, even with their money still tied up. And it's just like, so we raised $1 million, just under $1 million, in close to 3 weeks. And I was like, what the hell? This is crazy.
That's amazing.
And my dad also invested with us, which was lovely. Thank you, Dad, because he's on this call. Shout out to Dad.
That's amazing. Good for you. It's astounding to me to even like hear that number. Like how does anybody raise $1 million? But you did it. So good for you. I'm super impressed by that, and love that you were just like willing to get out there. And I couldn't agree more about the networking thing. Like something I do every single day is network And one of my KPIs change daily, but the one thing that's on there every single day is networking. And I think building relationships is so, so critical. And no matter what you do, really. But so we've been talking for a while. We haven't focused too much on syndications, but I guess I want my, a lot of the new investors are people that typically watch these webinars. I want you to explain to them how syndication can fit into like their overall investing plan and why they should even consider it, maybe rather than going it alone.
Yeah. So from a syndication standpoint, you're really starting from, I guess if you're watching this webinar, you're already interested in real estate or you're curious about real estate. One of the benefits by finding someone who is syndicating a deal and bringing in someone like you who is curious about real estate, wants to learn more about real estate, understands the value of real estate as a way to earn or make your money work for you. A syndication is a perfect way to start because it allows you as what they call a passive investor, someone who is, think of it as like, I'm passively watching everything that is happening in front of me. You have to make no decisions at all related to the property. The only thing you have to do is be able to read the what's called a private placement memorandum. It's just a fancy name for like whatever the investment summary is. It tells you all about the property and the returns and how your money will work for you. And it allows you to take, depends on the property and how much they're raising, but it could be as low as $25,000 to put into a real estate project. And typically a good syndication will be probably somewhere around, let's just for average's sake, somewhere around like a 7-year time horizon, where you will be able to put your $25,000 in, and every year or every quarter, depends how they distribute cash, you will receive some cash to your bank account. That $25,000 working for you, cash to you, kind of like a dividend paying stock, every year until at the end of the year. Usually the project will be refinanced or sold, and then you as a passive investor will participate in that sale or refinance by way of getting some kind of cash delivered to you. So you are making every year some kind of cash, on the $25K that you put in. And then at the end of the investment, you get some lump sum proceeds from the sale or refinance. Generally, a syndication, you're looking to return two times your money. 1.5 to 2 times your money is going to be what you're looking for. So from a passive investor, you also should expect your the person who's syndicating, so like the sponsor is the official title. So the person like me delivering updates to you. You would see financial reports quarterly, maybe every 6 months, of how the property is doing. So you would be able to see how the cash is being used, the revenue coming in, what kind of expenses are going out before the cash is then distributed to the investors. So, it really is just a great way to start, and just putting your money to work. And for the most part, it's, real estate, if you're listening to this, you probably already know this, but real estate's not like the stock market. It's not going to have these wild swings. Like right now, what the heck is going on in the stock market? Who knows? It's like, it doesn't make any sense. But real estate is a much more stable asset. Yes, of course, you have times in history where housing has crashed, and that was terrible. However, right now, housing fundamentals are superior and lending standards have tightened, et cetera, et cetera. It's a very stable way to invest your money. And as a passive investor, it's a very great way to de-risk, minimize your risk in doing so.
Yeah, that's great. And one thing I want to add in there, you talk a lot about like getting started, like new investors. And I totally agree. This is a great way to get started. But for people like me who I do real estate full time, right? Like I spend all my time finding new investments and just actively investing. But Airbnb is not something that I have ever taken the time to learn. And frankly, not something I even want to learn, because it just seems like the amount of time and effort it would take for me to do that would take away from other things I'm pursuing. So that's why I appreciate the opportunity to jump on your back, who's like becoming an expert and doing this really well. And I'm like, sure, you invest my money for me. And then the other really cool thing is like when we invest with you, we'll probably always invest our IRAs, right? Because as we have properties in our IRA, and we talked about before, like slowly having those properties make money. So like I only have like $12,000 in mine right now in cash that I can invest. And my husband had like 30 in his. So he invested 25 of that with you. Like that, we can really do much with that money outside of that. We would just leave it in there, let it continue to grow. So it's a really cool opportunity, even if you are pursuing other things, to take smaller chunks of money. Like there's $25,000 in real estate is not going to get you very far. And even if you did put it into, a $120,000 home, or kind of like max out what you could buy, you're still only going to make a couple $100 a month, return on investment from that long-term rental. You could make more obviously if you do like a short-term situation, but you got to furnish the apartment, the property, like there's going to be more expenses up front. So anyway, that's what I really like about syndications is I think you can be someone who just wants to be totally passive and just like put some of your money in it, every year, every couple years. Or you could be somebody who's like full in on real estate, but wants to diversify or wants to just try some different things without having to learn the whole thing or having to take on all the risk for one property.
I think that's a great point, because I mean, even another example would be like, we're consumed with short-term rental properties. However, there are other plays in real estate, just like large apartment, two hundreds of units apartment complexes that somebody could be invested in, that we could be invested in just to diversify ourselves. And I mean, even like self-storage is another thing right now, right? That is becoming more accessible to people. And so and everyone's going to be a little bit interested in something different. And so it's really just a matter of doing a little bit of research and finding someone who is looking for those partners.
Yeah, awesome. I totally agree. All right, well, this was really helpful. Do you have any parting advice for new investors or people who are just afraid to take the plunge?
I think, the parting advice really is just to research, but don't get analysis by paralysis, and just find someone that you trust first. Don't go online and look for someone or find someone who is just like this mastermind syndicator person that you don't know. There are people within your own network. Like you would probably be surprised, even if you think, I'm just taking San Francisco as an example, even if you're out in San Francisco and you're a techie and you're just like, I don't know anybody who's interested in or investing in real estate or into real estate, you'd be surprised. Just post something on LinkedIn, post something on your Facebook, look for those Facebook groups, go to your alumni groups if you have alumni groups, and honestly, here's actually the best piece of advice that I would say. Tell everyone what you are looking at, wanting to do, thinking about doing. Tell everyone. I'm telling you, even if you've never spoken a word about real estate, tell everyone. You will be so surprised. Oh, I know somebody who's doing that. It's like my old college buddy. It's like my frat brother or whatever. I don't know. It's crazy how just don't be afraid. So that would be my parting advice.
Yeah. Oh my gosh. I tell people that all the time. And I'm not saying, and I know you're not saying this either, like you're not doing a sales pitch. You're just letting them know.
Yeah.
And when you're going to know right away if they're interested or not. If they're not interested, they're going to be like, cool, good for you. But they're going to be like, I've always wanted to get into real estate, or I've been thinking about investing. Like you just open that door, and it might take you 2 or 3 more times of you just mentioning how much fun you're having or how great it's going or the project you're working on. But you could get an investor for life. So that's really, or a partner or whatever. So I agree, regardless of whether you're looking to syndicate or just invest, like share with people, tell people what you're doing, family, friends, everybody. And then also that goes back to what we were talking about before, like keeping that in the forefront of your mind and like constantly working toward it is really powerful too. Awesome. Well, thank you so much, Carly. This was really fun. I learned a ton. I hope that you guys did too. And if you want to reach out to Carly, if you want to get in touch with her, or you're interested in learning more about what she does, Carly, how can they do that?
The best way to get in touch with us currently is just through an email. It's gps@DaCostaREI.com. And that's GPS like GPs, general partners, at our last name, DaCostaREI.com. So that we will be happy to have a conversation or talk more about what we're up to.
Awesome. And I'll make sure that that contact information is in the show notes too.
Awesome.
But thank you guys so much for joining. This was really fun. Again, I'm Erin Helly, and I can help you with a lot of your real estate needs and can point you in the right direction and hopefully connect you with somebody within my network that can help you with what you're working on. So feel free to reach out to me as well. You can find me all over social media at the Erin Helly, and my website is bcglobalinvestments.com. But I look forward to hearing from you, and thank you again for joining us. Bye, guys.